take a closer look at the markets. Joining us now, Drew Pettit, Citi Research U.S. equity strategist. What are we waiting for here, Drew? It seems like we're waiting for something. What data points are coming that are most important? Is it going to be a CPI or PPI? We got a jobs number tomorrow. Obviously, we've got a fire hose of policy and executive orders coming out of the Trump administration. What's the market going to key off of?
The next tweet. Admittedly, it could be any of the data points as it affects rates. It could be any of the policies as we think about, potential tariffs and trade. And then the last thing that I think we're watching really closely is dollar volatility. I feel like we just moved past the tariff discussion, but maybe that comes back in 30 days. Maybe that comes back when we start talking about the House reconciliation bill. But at the end of the day, Joe, honestly, any of those things, because I think we're in a heightened macro sensitivity world, even though we're in the middle of earnings season.
Are you surprised that the 10-year that the yield is, it has not moved higher? In fact, it's moved lower in the face of tariffs. And what are we doing? We're extending the tax cuts now but only for 5 years to save money for the hawks. We're still going to run a pretty large deficit, are we not, in the foreseeable future?
Yeah, that's one of the things that keeps us up at night. Look, the 10-year at this point is probably responding to the growth outlook, less the inflation outlook. The front end might actually react to the inflation news. So we kind of saw that lately. The twos have been a little bit stickier than the tens have been. But honestly, when it comes to kind of the long end, if we do want to see rates lower, which I think is really important for markets right now, I think you have to see some type of spending pull-in to some extent, or at least just some more fiscal responsibility. Like, honestly, for the past couple of years, we keep writing about this. It's really hard to sustain equity valuations at these levels if you have rates pushing higher and higher.
So that's your problem. It's valuations. That's because I was wondering whether we still need, whether the market still wants lower rates. I don't see. It just doesn't seem like it's in the cards, given the type of moves that we're making.
Yeah, there's other things that play into this too. Like, again, we're not your typical strategist that's going to say, oh, PE is X, you should sell or you should be cautious. But it's basically on a relative basis. Like, PEs at these levels just put a lot of stress on fundamentals to deliver. I think we're seeing that in the earnings season right now, too. So we have macro sensitivity. It leads into, valuation sensitivity, which means I better beat and raise, and not just raise for a quarter, but raise for a year if I want my stock to react well right now. I really think with all of the news and all the heightened sensitivity and the reactionary type of, I would say, market we're in, it's probably a really good time to be patient overall.
I was going to wait to read this we have Ro Khanna coming on a little bit later, but we did have a CEO of News Corp, Robert Thompson, just saying in terms of business conditions in the United States, we're seeing a tangible increase in business confidence here in the U.S. The temporary turmoil of transactional tariffs aside, there's a confluence of economic optimism and cultural awakening with the yoke of woke having been lifted, and we believe that these trends should lead to less gratuitous regulation and greater capital formation. I mean, do you see, could it be that we're missing out on the big picture and that there could be some positive, animal spirits?
Yeah, I don't really know how to define or model animal spirits, but what I can tell you is for the past few years, and honestly, post-COVID, we've had a little bit of religion instilled in C-suites because we've really focused on free cash flow generation, profitable growth. So now we're getting the tailwind of all of that a few years later, where companies have a lot of financial flexibility. As you get further away from the pandemic and the weird kind of rolling under the surface recessions that we've had, it should be natural that animal spirits get lifted. On the margin, to be honest with you, whether you have a Democrat or a Republican-controlled government, all of these business people are looking for ways to improve margins, enhance efficiency. The reason we're kind of bulled up on the fundamentals now is you've just had a huge wind flow of all of this free cash flow. So yeah, I don't disagree with the statement that animal spirits are rising. How we think about it from a fundamental perspective is you have a ton of operating leverage. You have a ton of cash to put to work now.